I'm Nate Zielinski, that's Suzanne Andreessen, and this is Uncontested Investing. Welcome back to another episode of our market analysis and timing series. Today's episode is not just data and analytics, it's using data and analytics, because if you're an investor that's not taking advantage of some of the resources that are out there, you're way behind the 8 ball already. So Suzanne, let's dive right into it. Why does data matter more than ever for investors?
It's going to give us a proven track record, in whatever direction we're looking at, on fix and flip, buy and hold, any vacancy rates, all of that. It will help us make informed decisions.
Yep. And I think in today's market, especially, obviously the markets are cyclical. There's so many ups and downs, but in today's market, the margins of error are so thin. You really have to make sure that you're making the most informed decision possible. Data can be your best friend. It minimizes risk down to the decimal point. So it's really important to be tapped in to all the data that's out there. We'll go over a few examples later on in the episode, but really it's worth stressing just how important it is to be in an investor's back pocket.
Well, and it's going to give us patterns, and patterns can be of anything. We have migration patterns, we've got vacancy rates, we've got rental payments. Are they going up? Are they going down? We saw COVID come in and really show how that was affecting pricing and whatnot. So figure out what is the influence in a market and use the data to confirm it.
Yep, and there's always that fancy phrase of the latest data model. If an investor can come up with a data model, that allows them to scale faster, right? If they have a proven track record, a decision or a property type or an opportunity that works for them, and they can show that it can work in multiple properties in that area, that allows you to scale much quicker and make fewer costly mistakes. How many times do we talk about those newer investors getting started? They get so discouraged if they have that one property that doesn't go the way they thought it would right off the bat. That discourages them to keep going and they exit the industry altogether. We've had so many successful investors on this show that it's like everybody goes through that mistake, right? So if you have that data, that mistake may be a little less costly than it could have been, and you still have that confidence to keep going, keep grinding in this industry.
Well, and we've seen the transition in and out of working from home, and what that really did was add another room, most likely a bedroom, whether you use it for that or not. Creating a home office. So that changes your buy box. You went from a 3.2 to a 4.2 or 4.2.5, and so I think you look at what influences are happening in whatever market you're pursuing, and find a way to capitalize on it.
And major life events are something that can be big indicators and really make you want to tap into data. As you mentioned with COVID, that led to so many emerging markets, which we've discussed recently. A lot of people moving out of the city. There's those famous pictures of New York City in broad daylight on a Friday afternoon, and the streets are completely empty, because not only were people quarantining, but people were leaving the city altogether, finding neighborhoods, finding a better lifestyle, a little bit away from that hustle and bustle of the city life. So always be sure that if something big like that comes up, where the recession conversation is happening every other day at this point, it seems like. But that's another example of somewhere that you can use data, and the recession will kind of help inform you where to go next, right? Doesn't mean you take a complete step back. It just means you need to be a little bit more informed.
And we've talked about, even from that, using the data, for conversion of untraditional assets, taking a mill and converting that to either multi-use or all, unique apartments and condos in there. So there's a way to find out what's available in your market, find out what are the influences in there. Are you looking for 2-bedroom units in your neighborhood? Are you looking for single units? Are studios really the demand right now for, recent college grads or nursing students starting out? Find out what industry can support your buy box that can help you. And again, it's all data-based. It's all data-driven. It's going to help you make the right decision.
And it could be so crucial if you're looking to expand your horizons as an investor, go into different property types. Are you, strictly residential investment right now and you want to do commercial? You want to do storage units or warehouses? What's the data behind those, right? How well do those properties perform? How easy is it to get tenants? How long do those properties typically stay on the market? So how much time do you have to make a decision on if it's right for you? Data can help in so many different ways if you're trying a new property type out and you have some reservations.
But now, once you have the property, what's the data going to do next? What's the next step in that process? We've acquired the asset. It's a buy, hold, and rent. What are we going to use now to help us make sure that we're making the right decisions? Are we charging too much rent that's causing vacancy, or did we rent way too quickly and could have gotten another $75 or $100 a month? So what's the data telling us now?
Yep. And a lot of investors have that initial question of where can I even find this data, right? So we have to go over a few options for them because there's free tools, there's tools you have to pay for, and then there's even local tools that you can use just, going down to town hall, something similar like that, and be able to find data that can help you. I think with the free tools, though, if you have your pen and paper out, Zillow, Redfin, Rentometer, Census.gov, Realtor.com, and then HUD data is a great place to check as well. All these websites have free tools that investors can be tapped into. We've discussed it a few times before with, sites like Zillow and Redfin. You can draw that nice outline of an area or a market that you want to invest in, and then the stats from there and the data from there can be endless. You can maneuver it to any way that you see fit, and it can kind of help you make decisions based on that.
I think my favorite tool in that, though, is the Census.gov.
Okay.
With everything that we see happening and everything that's going on in our current economy right now, migration is the driving force behind a lot of decisions, in and out of markets.
Yeah.
And you can really get the free data to understand, not only where they're going, but what are their demographics. So there's a lot of pieces in that equation that's going to help you make a better decision. And another free tool is connecting with, your local real estate agent partner. They're going to be the ones that have the coming soon asset that they may have heard about in their office. It's not even on the MLS yet. How do you get in front of that? And that really is to have your local partners as well.
I'm so glad you brought that up, going back to the Census.gov, right? Because with the Zillow, the Redfin, and the similar sites, don't get me wrong, they're extremely helpful. But at the end of the day, you can kind of manipulate that data to kind of paint the picture that you want, right? So you can kind of talk yourself into this being a good idea. Census.gov is more black and white. It gets right to the point. It talks about, where exactly people are moving to, where they're moving from. So the Census.gov, if you really want that truth to just smack you in the face as an investor, the Census.gov is the best place to go. For some of the pro tools, though, you might have to pay a little bit for this, but you have to pay for a reason, right? We've sat down with a few people on this show that are tapped into the data and analytics side of the industry, and they know what they're talking about. They have a product and a service that can really help you as an investor. So don't shy away from having to pay for data. Maybe just do a little bit of research, check some reviews, maybe even word of mouth from people that you know in the industry that have also used this data. But you have CoStar, PropStream, Roofstock, AirDNA, and companies such as Mash Advisor as well that can help investors.
And we've had a couple of these folks on the show. We had Dwellesley. Dwellesley talks about some of your rental markets, and that's going to help you set your rental rates. And you go through Dwellesley and figure out like properties and figure out what, by square footage, by neighborhood, proximity to your asset, what are they renting for? But there's also one we talked with Voxter, and Voxter has a very different data strategy where that's teaching you what off-market assets are available. And we've got Open Door as well. So there's so many different things
For Costco,
that
with Sean Morgan.
so that you find what are you looking for,
Yes.
and be prepared to pay $20 or $30 a month, which isn't a lot if it's going to make you one wrong decision is well worth $20 or $30 a month. I think that's so don't be afraid to and some of those have trial programs. Go there and get your 2-week free trial. See how you like it. But before you sign up for the trial, make sure you know what you're looking for. Don't waste your freebie.
It's an easy numbers game too. If you're spending, let's do the high end there of what you suggested, $30 a month. If that helps you secure 2 more properties in that month, it's paying for itself over and over again. Even one extra property into your portfolio thanks to the data. So don't,
or even validating your current asset and your buy box. Maybe your rent is too low. All of a sudden you can charge another $125 a month and not have a vacancy rate. There's things that you can do to make sure that what you're doing today is correct and what you're pursuing tomorrow is accurate.
And you started talking about it with real estate agents, but there are local resources as well. You have your county assessor's website, going down to town hall, you can find data there as well. The MLS is super important to be tapped into as an investor, and then local real estate board. So that networking, you're talking to people that have the boots on the ground. What are they seeing? What kind of data are they utilizing? That's one of those places where you can really get that suggestion from someone you know, someone you trust, and be like, I've been thinking about data for a long time, but hearing her and him say that they use it as well, okay, now I really want to get tapped in and start taking advantage of it.
And we talked to your national REIA. There's a ton of those organizations in your backyard. Find out what they're using. that's not a competitive element that they're afraid to share.
Yes.
They may try and beat you to the 2 bedroom in the property across the
Yeah.
street, but they will tell you what they're using to analyze it.
So as you can see, we're just scratching the surface here with how investors should and could be using data and analytics. We'll take our first break of the episode. We'll see you on the other side and continue this conversation. Thank you.
See you soon. REI Inc. is the premier monthly publication for real estate investors. Dive into a wealth of expert insight and strategies from industry leaders and gain valuable regional market insights, ensuring you always have the best information at your fingertips. Visit rei-ink.com to elevate your real estate investment game today.
We're back with this week's episode of Uncontested Investing. Suzanne and I have had a great conversation about using data and analytics thus far. We've talked about why it matters, where to find it, and now we're going to dive into how the top investors are using data. And I think the best place to start is identifying those emerging markets we've been talking about, right? Before they become mainstream, that data can help you get a leg up on the competition, get that antenna raised and be like, okay, I'm starting to see some semblance of a trend here. Let me get on this train before it's too crowded and there's no room for me to expand into this market.
And we've talked about short-term and midterm rentals, and when do you want to have that conversion? The short-term rental or vacation rental is really your most profitable. But if you have a week vacancy every month from that strategy, maybe it's better to take that as, you know what, I'd rather have consistency and have someone in here for the entire summer. I don't have to provide the cleaning service. I don't have to. So there's things that'll pare down to make that more balanced, but also take the stress off your plate.
Mm-hmm. Yep. And then you have consistent criteria, which this data can, just help you tap into. You're just analyzing the deal for what it is, right? There's no emotion involved. If the data is telling you yes or no, then listen to the data, right? It's math, it's analytics. There's no, I really need this house. I had a rough month last month, so I need to go out and be more aggressive. That's when you really need to be more conservative in a way. But the data then, once you're being more conservative and letting the data tell you what to do, then the aggression is where it should kick in.
Well, and the hot markets create this kind of frenzied,
Yeah.
I have
Yep.
to get
Yep.
something. We saw that during COVID, where you saw people bidding 20% over, asking, and it was, going under contract in 3 and 4 days. Even in Maine, which is unheard of, we are much slower up there trying to pull things together.
Yeah.
So I think, how do you keep the emotion out of it? And make sure that use the data to balance the equation.
Yeah.
You'll never get a wrong answer.
Yep. And one of those things you talked about when people get in that frenzy and they realize that they're in a hot market with a lot of competition, that's when you can start to overpay drastically. And then you get this feeling of, yes, I secured the asset, but that lasts for 30 seconds to a minute when the reality sets in and you're like, oh boy, I should have checked the data first because it looks like even though it is a hot market and I won the property, I overpaid by about 15-20%. And that's what's going to hurt me in the long run.
And are you going to be able to then complete your buy box,
Yeah.
keep the rental rate to balance the equation?
Yeah.
And that's really, it is math. Numbers don't lie.
Mhm.
Once you do the math, it's the output is what you need to trust. Sometimes your gut instinct pays a little bit into that, but the numbers are really going to be what substantiate the decision.
Yeah, and the data can point you to those hot markets, right? Those emerging markets, but they can also direct you to the most underrated opportunities, right? What are people overlooking? What is cash flowing more than people think? Where can I fit in to avoid the competition and still make a pretty solid return on my investments? Data can uncover those stones like you wouldn't believe.
And when you're looking at, you look at your buy box, and if you adjust your vacancy down, what does that do to your rent? And figure out the sliding scale. If I drop $100, my vacancy rate goes away. If I go up $50, will my vacancy rate stay the same or will it extend? So, use again, it's math. What's going to happen? Use your formulas and figure out what works. Use the data. What is the average vacancy rate in the industry? What is the average rental rate in the industry? Is your property slightly better and more improved? Then you can maybe charge a little bit more, but you need to know your information. Go and visit a couple open houses that are out on the market. See how that property is presenting and making sure, and where are you? Are you equal to, above, or below on how that's showing in the market?
Make sure you're being honest with yourself too when evaluating those properties in person. But yes, you're right. The data will tell the truth no matter whether you like it or not, I
Yes.
guess is the way to put it.
Honesty can hurt.
Yep, yep, yep. So I think going over all the positives that data can provide, obviously it's an asset and investors should be using it, but there's also something to avoid called data paralysis, where you can become too inundated with the data, uh, keep running models, struggle to make a decision, and then once you feel like you found the best solution, you look up and that property is off the market, right?
Yep.
Or the strategy that you thought would work has since passed you by, and all that data and all that analyzing is for nothing at that point.
You just hand that sheet to the person who bought it.
Yep. Yeah.
Yeah, but it is, you can't, analyzing is certainly, a pothole you can get stuck in.
Yeah.
And I think you need to, you just input. I think once you get your groove, you should be able to plug and play a number.
Yep.
Figure, set your formula, find out what works, and then see how it tabulates in the back end.
Yeah, and we've talked about investors looking in the mirror, being honest with themselves, know the difference between analysis and procrastination, right? Are you just using the data as a stopgap to, kind of help you not make a decision, or are you actually using it to empower you and make those informed decisions, right? Because decision driving data, it can be very helpful if you just let it make the decision for you. Don't overcomplicate it. Don't find a solution and then be like, can I find some data that can disprove what I just found? Really just put in the work, find the solutions, and go after them with the help of data.
Well, is it analysis or paralysis?
Yep.
Truly, and you look at it but find a way to, you know, look at the numbers and test it. Test things that you can do. If I need to go another $15,000 in my renovation budget, to really put in, the granite countertop or
Yep.
whatever, can I cover that in what this market's doing? Yes, it'll make it a better showing asset, but will you be able to get the rental rates just to support the financial?
Yeah, and there's so many tools out there now that you can actually set your buy box as a default and allow that data to send you updates, right? If something becomes available that fits your criteria, and maybe you need to be a little bit more conservative so you know the data is giving you the kind of that almost perfect solution. When you get those updates, that should make an investor aware of the fact that, okay, this is a property I know I need to go after because I set up the data guidelines. I was a little bit more conservative. I wanted to color inside the lines on my next property. If that alert comes through on your phone, you can be certain that that's a property you need to go after.
And another tool I believe we had maybe a year ago on the program, was Blue Hammer,
Yeah.
and where Blue Hammer goes out there and allows you to go in and go room by room and do renovation estimates. Are you going to refinish the hardwood floors? Are you going to repair it?
Hmm.
And the labor rates are fed by zip code. So again, that's like, again, I think it's like $20 a month. We talked about that, but find the tools that will provide the data and analysis that can make your project work.
Yeah. And if you're an investor out there and you want to start using data today, I think the best place to start is setting up those alerts. Sites like Zillow or Redfin have those. You set them to your target zip codes. You can even expand into national markets across state lines if you want. As long as you have that buy box set up, you get those alerts, you start running with it. I think a weekly rent comp analysis is another way for people
Sure.
that have rentals already in their portfolio. There's sites out there where you can run those analyses, right? Those reports. Is your rent roll stacking up? You mentioned it, Suzanne. You can be leaving money on the table by not charging enough for rent. Is your property worth it? Should you be charging that extra $100, $200? If you're doing that across 10 properties in your portfolio throughout the year, that starts to add up
Sure,
pretty
it's a
quickly.
monthly basis too.
Yeah,
It's
you're
this
leaving.
it's
You're
there's
leaving
quite a bit
five.
of money that
Yep.
you're letting go, but you had I caution on going too far.
Yep. Oh, for
Because
sure. For sure.
1 month of vacancy eliminates all that gain.
Mhm.
So it's a fine line.
Yep, for sure. It's a good thing to know that you have more room to charge for rent, but that doesn't mean you need to do it all in one fell swoop, right? Don't say, "Oh, I'm undercharging by $275. I need to drive over to my tenant next week and say, "Hey, your rent just went up $250." No, it's, 50 here, 100 here. I think any tenant that stays in a property long term, that becomes somewhat of um, an expectation, right? That they're gonna charge more year over year. So you do have to be very careful with it. You're right. It's a fine line, but there is still money on the table that you could be taking advantage of.
But keeping that tenant that is a long-term partner, who, has pride in the asset, has
Yep.
planted the garden, is prepared to shovel the sidewalks or whatever to make their house a home.
Yep.
Don't it sometimes that's a mental safety net versus a financial safety net, and it may be worth it to you to keep them there for a longer period than having to get somebody new.
Yep, and you can even, on a basic level, I think tracking markets with a spreadsheet, right? How long did a property stay on the market for? What did it sell? What was it listed for? What did it sell for? There's certain metrics that you can just keep track of very easily, whichever way you take notes. I know Excel is the most popular one when the word spreadsheet gets brought up, but there are other ways to just kind of keep tabs on what's happening in the area that you're looking to invest in, and that can help you make so many more informed decisions.
So it's I mean we've given you a lot of data today.
Yeah.
Find the solutions we've shared. Find those that work for you. I think there's some great tools. And take a shot at trying some of these products. We might the ones that you have to pay for. All of them have trial strategies. Give it a shot.
Yep. You said it best. The opportunities are endless, right? It's not just about securing new properties with data. It's about taking advantage of the properties that you already have. So, Suzanne, thank you so much for your time today. This was one heck of an episode. I'm your host, Nate Zielinski. That's Suzanne Andreessen. Thank you to our audience. Tune in same time next week. We'll see you on Uncontested Investing.
See you soon.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.